Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kalakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.
Good afternoon, everyone. You're listening to The Real Estate Show. I'm your host, Terry Kalakos, chartered real estate and mortgage broker, as well as president of Northeast Real Estate and Mortgage Agency and CBC Alliance. And today we're going to be talking about selling your property in today's real estate market and how to make sure that you're getting top dollar for that transaction. Joining me, we have my co-host, Mirav Marciano, chartered real estate and mortgage broker extraordinaire, and vice president of Northeast and CBC Alliance. But between us, we all know who the real boss is. It's Mirav.
C'est moi.
That's right. Okay. Funny story. Okay.
First of all, thank you for the nice, warm welcome.
Of course.
And thank you for acknowledging my bossiness.
So really funny story. Okay. I promise we're gonna kick off today's show, but I have this really bad habit of just like putting my foot in my mouth when I shouldn't be. And when we were in the car coming in just now, I do accents. Okay. So I was doing this Parisian accent, right? And I'm going on and I'm, whatever. I'm doing this. I'll spare you guys from listening to my Parisian accent, but I'm doing it. And there's this guy that's parked in back of us. So I say to Mirav, I'm going to go and tell him to move. So I get outside their car and I'm like, excusez-moi, monsieur, est-ce que tu peux? And he looks at me and he's like, Terry. And I'm like, oh. Anyways, it's someone that I knew. And then he's trying to figure out why the hell I'm freaking busting out in this weird accent. Anyways, whatever. I thought that was pretty funny. It's funnier for me, I guess, than it is for other people, but whatever. Feel free to reach us online at www.nordest.ca, and you can also visit us on our Facebook page, which is facebook.com/Northeast Nordest and facebook.com/CBC Alliance Quebec. And if you haven't done so already, take a moment to subscribe to our YouTube channel, which is newsonthego.ca. And of course, you can reach us at the office at 514-680-4674. So before we kick off today's show, Mirav, market update. What's going on?
Oh boy.
Yeah.
So this week we had Bank of Canada announce another rate hike of
0.25, which is in line with what we talked about last week. We were anticipating it. Interestingly enough, this week I also participated in a roundtable, if you will, with the Bank of Canada. That was on Wednesday that we did that. And here's some good news. So I just gave you some bad news. The good news is for the foreseeable future, they are halting any rate increases.
And this is straight from Bank of Canada's mouth.
This is straight from the Bank of Canada's mouth in that discussion that we had. So this is not coming from my crystal ball. This is not coming from anywhere like that. This is straight from the Bank of Canada's mouth. They want to see the effects of all the interest rate increases that they've done over the last year as what it's going to have on the market and on inflation. And then based on that, they're going to make a decision later on this year as to whether or not they're going to continue raising or reduce rates.
I don't think we're going to see more increases personally
this year. I don't think so either.
No.
So this is good news for anyone that has a variable.
Good. So we can finally breathe a sigh of relief and say, this is it. This is the last one. We can breathe for the rest of the year.
Yeah.
Now, what about inflation? They announced that for December, we ended with 6.3%, but mostly because of the price of gas dropping.
Exactly. Yeah.
So do you think it has anything to do with the rate increases?
No, I think that, and we've talked about this, is I think that when we're looking at year over year numbers, naturally we're going to see inflation come down. Because when we're complaining or comparing,
that was
yeah, that's me complaining. But anyways, if we're comparing, year over year numbers, okay, we're going to see that it's not going up. It's stable compared to last year, the inflation, and seeing as that's going to net us out to a pretty good number, and we'll probably end up hitting the target of inflation at 2% probably by the tail end of this year, beginning of next year. Again, that's coming out from the Bank of Canada's mouth. This is not coming from me. This is coming directly from them. For those of you that get our blogs, you can actually read the entire monetary policy report. It's a riveting reading. If
bedtime story.
Yeah, if you're not able to sleep at night, just go onto our website. Get Google to read it for you, and I guarantee you, it's better than NyQuil. It's better than ZQuil. But
summary. What's the summary?
I mean, the summary basically says that they're gonna wait and see what's gonna happen with inflation and whatnot. And there is a lot of mention about how China and how the how supply chain has basically improved right now. So it's taking away a lot of the pressures, if you will, of the transport costs and all that stuff. So because of that, prices are naturally coming down just because of that. And of course, the price of fuel and oil has come down as well. So all of these elements altogether is good news for all of us.
But so far, when it comes to groceries and things like that, we still don't see any kind of drop. I hear a lot of people still very stressed about the fact that groceries have become quite expensive. It's either they've doubled or the packaging has shrunk. So
that's right.
It's really scary to know that even essentials are becoming that expensive, and
it's true.
Cost of living is becoming expensive. So
it is.
The government definitely has to do something about that.
I am 100% in agreement with you.
Now, with respect to the real estate market, what are we seeing out there?
So I said it. We've said it on the real estate show. It's not going to take much for there to be a massive shift all of a sudden, going from, crickets to nothing happening to all of a sudden the market moving in a very meaningful way. And this is what we've seen this year, right? So we saw now the Bank of Canada raised by another quarter. They're talking about they're not going to be raising anymore. And this is the indicators that people are waiting for. They're looking for this. They're also looking for a drop in home prices, which a lot of people believe that house prices in Quebec, because nationally they've dropped, they believe that house prices have dropped in Quebec. So they feel that now is the time to actually act. And I actually had multiple transactions that we did this week of people buying new houses. And one of them in particular, it had been 2 years that they were actually more. It was pre-pandemic that she was trying to find a house. She finally found a house. She was in tears when the mortgage got approved. Okay, so there is, I think that there is a lot of people that have been kind of waiting on the sidelines that now all of a sudden they're acting. So I think that we're going to have a pretty good year. There is talk, and I don't want to scare people. So if you need to do something, now's the time to do it. But there is talk that OSFI, which is the Office of Superintendent of Financial Institutions, they're talking about introducing a new metric. And there's basically a call for comments, which, believe me, you can count on me to make a comment on this. Mm-hmm. But there is a call for comments on it, and they want to introduce a new way of determining whether or not someone can qualify for debt. Okay, so right now we use the GDS-TDS ratios, which basically say that you can't spend more than a certain amount of your gross annual income on debts that are specifically related to the house or credit cards and loans and so on and so forth. Now they want to introduce something that's called a debt-to-income ratio, okay, which basically says that based on your income, you cannot have over a certain amount of debt.
So now we're looking at balances rather than monthly payments. It's a different calculation.
That's right. And it's a dangerous line.
Yeah.
It's very dangerous because if they compound that with everything else that's there, it's going to cause a lot of problems. So if you do have credit card debt, if you do have stuff that's accumulated, now is the time to actually wipe it out. Even though interest rates are high, you could still get actually rates that are pretty competitive. You get in, you refinance that toxic debt, get rid of it. So that way it's not lingering. In the event that OSFI does put something like that into place, it's not going to impact you. So if that comes up, I think that there's going to probably be another slowdown, but it's not going to, I don't think it's going to have that major of an effect.
So now's the time to strategize. Now's the time to put offers. Now's the time to list. basically this is not the time to wait. This
Exactly.
is time to act because we don't know what's coming in the future.
Exactly. And if there's one thing that you can count on, is change. Right? I mean, it's the one guarantee that we have in life.
Absolutely.
Is there anything else that you've seen as far as...
Well, definitely a lot of special assessments happening in condos. So definitely get ready for that. A lot of condos are filling up their contingency funds and definitely fixing up things that were left behind for many, many years.
Okay, I'd like to talk a little bit about that after traffic. When we come back, we're going to be looking at what sellers can expect in today's market. But first, we're taking a small detour off to the CJD Traffic Center. You're listening to The Real Estate Show, and today we're talking about selling your home in today's real estate market. Feel free to visit us online at www.nordest.ca, or you can reach us at the office at 514-680-4674. And before we went off to traffic, we were talking a little bit about condos and condo fees and assessments and all that good stuff. I don't know if you want to expand on that a little bit, Marav.
Well, definitely we've seen a lot of condo buildings that haven't done much in 10, 20, 30 years since the building was built. And a lot of owners are quite surprised when they get a letter after, obviously, multiple meetings and multiple votes that there's now a special assessment. It could be 10,000, 20,000. We've seen it as high as 30,000 per condo. And it's quite scary for condo owners. And a lot of it is not understood. So basically, they have to collect this money from all the condo owners to now cover this new roof, the garage, all these necessary repairs,
Right.
elevators, things like that. So,
Which makes owning the condos more expensive. And if I look, again, this week, I had to do a pre-approval for a customer who had bought a condo a couple of years ago, and their condo fees were just south of $400 a month. And then all of a sudden, with these new rules and stuff like that came into being, now all of a sudden they're finding themselves with condo payments of $640, right? And they're looking at this and they're going, what are we paying $640 for, right? So what do they decide to do? They're like, we don't want a condo anymore. We might as well take that $640, add it to the cost of the mortgage, right? And actually buy a house and have more space and more land and more everything.
look, at the end of the day, when you're buying a condo, you're buying the condo living experience. So you're buying the hotel living, the hotel lifestyle, the heated garage, not having to mow your lawn and all that good stuff that comes with it, the pool and all that stuff that, those perks that comes with a condo. And yes, you're paying for it, we've seen it, and sometimes it's worth it. Sometimes it's not worth it. But at the end of the day, right now, they have to, I don't want to say pay for their mistakes of the past, but basically the government put in these rules that you must have these contingency funds, filled with money in order to
do the necessary repairs.
Yeah, especially emergency repairs. If your contingency fund is empty, that doesn't make sense, right? So you also have to look at it from the standpoint of the condo association's funding. It has to make sense. So yes, maybe he has an increase of $200 a month, but that is for his protection.
Yeah.
So
the other thing is that, we have to remember in Quebec, although condo fees have gone up nationally, they are actually quite low. And if we're looking at, North America, I mean, let's look at the United States. Condo fees are actually 3 to 4 times in some cases of what they actually are here. And we've seen it even with our own properties that we have in the States.
absolutely.
We're talking about, condo fees of $1,000 a month. So I understand. Okay, so let's look at today's market now. Okay, so we're in a new market. This is not a COVID market anymore. Okay, we know this. It's not even a pre-COVID market.
Yeah, and I think that's important to mention because a lot of people say, well, great, now COVID's over. We're back to 2019. No, we're not.
Yeah.
No, we're not. It's a completely different market from 2019. It's not a COVID market where you have 20 offers on day 2 of listing the property.
They come in on day 3, right? No.
But we do.
Yeah,
honestly,
there's still multiple offers.
Our
in some
realtors right
cases.
now
Yeah.
are working with buyers. Every single property they've put offers on has multiple offers.
Yeah.
So let's not kid ourselves. This is not a buyer's market.
Yeah.
It's just not.
Even though you're going to read sometimes certain articles in certain places where they're going to say, oh, it shifted to a buyer's market.
Maybe nationally.
Maybe
Again,
nationally.
It depends
Yeah.
what you're reading. But for Quebec, for Montreal, for Greater Montreal area, we are still in a seller's market, or if you want to say a stable market, but I would still call it a seller's market. So buyers do have to be competitive with their offer.
And it's one of these things, I mean, if we look at the tail end of last year, we did have quiet months, obviously. We had a very, very strong, mid-year, I would say. From the beginning of 2022 to all the way to probably about July of 2022. It was crazy. And, I've made reference as to, we had some of our most profitable months in that time period. And then it did get quiet. It didn't go dead. It went quieter compared to what it was. But that just means that there's a built up kind of demand that's growing, right? Because if you have the intention of buying a property, you're not going to suddenly decide, well, I'm not going to buy one anymore. You're going to wait. Maybe you're going to wait 6 months. Maybe you're going to wait a year. But at a certain point in time, you're going to take the plunge. And when you do that, hopefully you're not doing that at the same time as everyone else does. And that's one of the things that I was telling a lot of the customers last year. They were coming in for pre-approvals and they were like, oh, we're going to wait until the spring. And I would say to them, don't wait until the spring. Everyone is waiting until the spring. If everyone comes into the market at the exact same time and supply hasn't gone up, which we've seen.
Which it hasn't.
It's gone up a little bit, but it's not gone up as much as people think it has.
Of course.
You're going to find yourself in a situation where all of a sudden you have those multiple offers again and you have that frustration. You got to go, the best advice that I've always given to any investor in anything, whether we're talking about stocks, mutual funds, and real estate. When you see a market going in a certain direction, when you see the crowd moving in a certain way, you got to go the opposite way. Always.
How does the expression go? People want what people want.
Yeah, there you go. Exactly.
But it's human nature also, right? So at the end of the day, you're right. If everybody had the same philosophy of let me wait until spring, then yes, there will be a slew of buyers. But we've already seen literally the minute that the Christmas break ended, it's as if they all decided at the same time their New Year's resolution was going to be to buy a house. And I could tell you, we are busy.
Yeah.
We went through November, December, which was very quiet and relaxed and slow. We had transactions here and there. It was, okay, finally we can breathe. And now it's back to being busy.
Yeah, it's
so definitely the whole wait and see. I wouldn't use that approach anymore. If you're out there, whether you're looking to buy or to sell, this is the time. And even if you're looking to refinance. Yeah. Honestly, this is the time to take action.
I agree. Okay, let's let's look at, when it comes to listing your property, a lot of sellers, I think they still have to be mindful of the price that they're actually asking because you also don't want to burn your listings. So although prices have not gone down very much, you can't expect to sell your house the way that it was being sold last year, $100,000 over asking. Partially because, the real estate board put in rules with respect to undervaluating listings, right? So let's touch a little bit on that.
Yeah, and I think also, besides the real estate board, the OACIQ putting in rules, I think also when you have multiple offers of 20 offers versus multiple offers of 5 offers, it just makes it, as much as, yes, it is competitive, it makes it a little less competitive. We're seeing a lot of buyers not qualify for a lot of properties out there because of the new rates, because of the rules, because of all these things that are basically shrinking down their potential borrowing capacity. So at the end of the day, I think that, you basically, you just have to go for it. And I don't think that it's going to be 100,000 over asking that you could expect. You can expect maybe asking if it's listed properly, priced properly with your realtor.
The other thing that you have to remember, and this is something that's come up often this year so far, people that were pre-approved last year, in particular, people that had their pre-approvals done I would say in the summer of last year. And there's a few of them. And we find ourselves in the last little while going back to those pre-approvals and revisiting them just to make sure that the clients still qualify for the same amounts. In some cases, if their incomes have not gone up, their actual pre-approved amount has come down because of interest rates.
Yes.
Right? Because of the stress test. Remember, we're not qualifying you based on whatever your contract rate is. You know, you're putting 5% down on a purchase. You can get a mortgage with as low as 4.5%, 4.59%. But when we're talking about what the actual rate that's being used to qualify that mortgage, we're talking about 6.59%. So it tends to, you have to be careful and you have to make sure that you're being qualified properly with today's interest rates, right? When we come back, we're going to be talking to a Northeast real estate broker about what it takes to sell your home in this market. But first, we're heading off to a CTV News update. You're listening to The Real Estate Show, and today we're talking about selling your home in today's market. Joining us on the line, we have Michelle Marciano, a real estate broker at Northeast. Welcome to the show, Michelle. How you doing?
Very good, thank you. Thank you for having me.
Hi,
Absolutely.
Michelle.
Before we kick it off, it's a little joke I have to say. Come on.
Okay, go for it.
So, Michelle, your last name is Marciano. Murav's last name is Marciano. We have two Marcianos in the booth here, okay? So what do you get when you have two Marcianos and a Greek inside of a booth?
What is it?
An amazing show. No.
Let's get back to business
Marco's
here.
not giving me like a ta-dun-dun. There you go.
So, Michelle, back to real estate. Thank you, Terry, for that interesting joke. What are some of the first steps that if somebody wants to list their property, what are some of the first steps that they have to take with a real estate broker?
All right. So it's all about assessing the client's situation, needs, and objectives.
Mm-hmm.
Also, of course, the client trusting you. You want to know why the client is selling. You want to familiarize with the financials of the clients.
So hold on, Michelle, if we could just ask you, why is it important to know why somebody wants to sell? Because I think maybe our listeners are wondering.
It's actually a very interesting thing because for me, it's exactly what I would ask a client.
Yeah.
So I'm actually curious to see what Michelle would have to say about something like that.
We want to know if they're looking to sell because maybe they need to purchase another home. So we want to make sure we coordinate the timeline. We want to know if it's a personal situation. So it's very important for us to know what's the reason of selling their home.
And with respect to the financials, you sit there and you calculate basically if you sell your home, this is what you're left with. This is what you're going to have left over as a down payment. Is that what you mean by the financials?
Yes, of course.
Okay.
So I want to be transparent with the client and let him know exactly how this process works.
Nice. What else can they get prepared for? What kind of steps can they get prepared for when listing their property?
Yeah, so I want to go ahead and explain how the marketing and the sales plan will be presented to the seller and the potential buyers. Gather the paperwork and sign the listing agreement, go over the seller declaration.
So the seller's declaration, it's that document where basically the seller has to explain everything that's ever happened with respect to the history of the property, right?
Yes, absolutely.
And that's important because I think buyers want to know what's been the history of that property.
Yeah, it's a document that must be attached to the listing. Sorry.
Yeah. It's and the thing that you have to remember also is that, I mean, when you don't have that document properly filled out, it opens you up for potential issues, right? Because if there's something that you were supposed to declare in your seller's declaration and you didn't declare it, I don't know, you had mice, you had cockroaches, and you don't declare something like that, and then the new buyers actually discover that you knew about this, well, that opens up a can of worms as well, correct?
Absolutely. That's very important, yes.
And we've seen this, by the way, in the past. We've seen clients who have omitted certain things.
And now with respect to pricing, Michelle, what kind of process do you go through to price the property?
So that's why I explained the comparable houses that have been sold in the area. With that, we can decide together the right price.
Mm-hmm.
Once we establish a price, then, of course, I want them to make sure that I'm the right person for that listing. And then we're ready to put their house on the market.
I'm curious how many people, after you've presented them a CMA, so a CMA is a comparative market analysis, right? So that's what basically indicates what the value of the house should be selling for. I'm curious how many people look at that CMA and then they come back to you and they say, well, the CMA says that I should be selling my house for $800,000, but I want to ask, I don't know, $2 million. Like I'm exaggerating there, but
everybody thinks their house is better than the comparatives.
Yes, everybody does, but at the end of the day, there is. That's why I do like to show the comparable, because it's important to know that we go with the area, with how renovated the house is, which means what kind of
any kind of work that was done on the property.
Yeah, exactly. Right. So
Exactly. Improvements, basically. So maybe my neighbor doesn't have a finished basement, but I do. So that adds to the value of the property.
Of course, at the end of the day, there is a certain market that would give us the price.
Exactly.
That's why we have to establish the right price.
So I don't think that there's a single client that I've ever met with probably maybe the exception of one or two. I should say one or two, who, when they come in to see me for a mortgage, they say the exact same thing to me, okay?
Yes.
So so I always ask the question, I'm always, what do you think your house is worth? Because I have to put it in. So they're going to come back to me and they're going to say, well, my neighbor sold his house for $780,000. But I have the corner lot, or I have a bigger garage, or I have done this, and therefore I think that my house is worth $1 million. So there's always going to be that, obviously there's the pride of ownership, and I think that it's important that everyone has it, but you do have to be you have to be realistic in what your expectations are. And I feel, and correct me if I'm wrong, but I think that in many cases, a lot of times real estate brokers are going to use what the client is basically saying as almost like a way to trap the client into believing that real estate broker would be able to sell the property for more than what it's actually valued at. So, client, you do your CMA comes in at $700,000. The client believes that his house can sell for $8 million. You adamantly, as a good real estate broker, are going to say, listen, the CMAs are telling us $7 million. But then another real estate broker might come in and say, well, if you want us to list it at 800, let's list it at 800. My question to you is, what kind of dangers, if you will, do you have when someone overprices their house compared to what it should be?
That's where I'm going to say a good real estate broker is going to actually give the right price. Because what happens is, if it's going to be overpriced, the listing can be sitting there for months and lose a lot of potential clients. So I would definitely say that would be a terrible,
terrible
just to
mistake.
take the listing and give the wrong price.
And you burn the listing at that point, right?
Absolutely. Absolutely.
And I wanted to touch on something, Michelle, so if you don't mind,
it's like we're giving her an inquisition here.
Yeah, I'm sorry, but I want to get as much information as possible here.
I love her. She's like, she's like one of the best brokers that we have at Northeast. So
Thank you, Terry.
With respect to those people who want to sell on their own, I'm saying those people, it sounds so terrible. The people who choose to sell on their own to save on the commission, what's the danger in that? What do you get when you use a licensed realtor?
So I have to say that we actually, and Terry would probably confirm that, we had a client who did that, tried selling on his own, and finally we ended up taking the listing and we sold it for him. The first thing is, obviously, by selling it on your own, you don't have the legal documents that attach you to that property. So for any reason, like we had with that client, if they decide to cancel, it becomes much more complicated than having an agent. Also, by having us as an agent, we do the proper marketing. We have a lot of our own clients that we can attract to that listing. And of course, we'd be doing all the work for him.
And of course, the important one is the protection. We have liability insurance as,
Of course.
Licensed realtors. So definitely, if there's any recourse, your liability insurance for SEEK you'd be able to have a claim there and compensate the client for that, which would not happen in a for sale by owner.
No, and also make sure that we're with the right price, because if he's not in the right price, like he would probably confirm, he cannot sell it. So we are professional, we have experience, so we were able to really guide him and tell him this is the right price, that's how it's going to sell, and help him through this process, because obviously, we have that experience.
Michelle, that's awesome. If people want to get a hold of you, how can they reach you?
Well, they can reach me at 514-812-63998, and I'd be very happy to help anybody who have any questions.
Awesome. Thank you so much, Michelle.
Thanks,
you.
Michelle.
Have a great day. Thank you. Bye-bye.
Bye. I love her. I swear. I love her. She's the best. She's the best. Up next, we're going to have a look at what will affect real estate prices in the coming years. But first, we're going to take a small detour off to the CJD Traffic Center. Thank you for tuning in. Today's discussion is all about selling your home. You can call us at the office at 514-680-4674. And don't forget, you need to subscribe to our YouTube channel, which is newsonthego.ca. You have to. It has to be done. Or
Nobody likes to be told you have to.
I know.
You
should. Or you can listen to us. You could listen to our podcasts, which are on Spotify, iTunes, Amazon, I think. I mean, we're everywhere, right, Marav?
Pretty much. You can't escape us.
The only thing that I will say, if you type Terry Kalakos in Spotify, you're going to fall on my, my playlist.
Yes.
Please don't judge me.
He's got a very interesting choice of songs.
Yeah.
Back to real estate. So I think everybody's curious. I don't know why that word was curious.
Curious.
Everybody was curious about basically what do we foresee in the coming years? What affects the price of homes? What can affect the price of homes?
Do I pull out the crystal ball here or what?
Well, basically, what are the things that we should be looking out for? What are the markers out there?
Okay, so the number one marker is on the very basic. Okay, let's talk economics 101 is inventory. Okay, let's look at a basket of apples. Okay, if you have one apple in that basket and you have 100 people wanting to buy that one apple, you better believe that apple is going to sell for a crazy price, right? But if you have 100 people wanting to buy a basket full of 200 apples, well, guess what? They're going to be the ones that are going to be dictating the price of that apple.
So basically supply and demand.
Supply and demand, exactly.
So inventory is going to be a big factor.
100%.
So with respect to inventory, really the only ways to increase inventory is add more listings.
Get more new constructions in there and stuff like that, which we're seeing moves, right? We've seen the government, they've loosened up, they've lubricated, if you will, the new construction industry a little bit.
Yeah, they've removed some of the red tape to accelerate a little bit of the process. That's
which is
for
good.
Sure.
Which is very good.
And we've seen also the price of material drop a little bit. So construction is becoming a little bit easier.
Yeah.
So hopefully we'll see more inventory, but I still don't see enough inventory going up there.
And a lot of people believe there, and the amount of times that I've heard this, and I have to tell you, and even, going back to what we were talking about with the Bank of Canada this week, right? Because one of the questions did come up. Do you think that all these rate increases that have been going on is going to have a negative impact on the real estate market? And you know what they came back with? They said, no, it's not. For the simple reason, and I actually believe it. And it's me that I'm not, I don't hold up big government flags, okay?
Yeah.
Like I
but
don't
this,
trust.
what they said made sense.
But what they said made sense.
Okay.
Canadians, although the Canadian debt level is high, and it is, it's not based on mortgages. It's based on everything else that surrounds it. okay? You have a market right now where house prices in certain parts are high. For the majority of the country, they're still relatively low. And you have people who are actually have paid down their mortgages significantly. And I'm seeing it, even for me when I'm doing renewals. I have clients with $150,000 mortgages, $80,000 mortgages, $60,000 mortgages. They have zero interest in taking any more money out. They have no debt, and they're in a very good position. And even if interest rates are higher, they don't care. So it's not like they're going to be running to sell this house.
Yeah, because Canadians are not the type of population who uses their home as an ATM.
Not as much as the media lets on, okay, or certain government people will let on. Okay, so seeing as that's the case, you're not going to have all of a sudden interest rates go up and people are going to be flooding to sell their homes.
Now, what will add some inventory as well is the amount of people retiring going into old age homes.
We do have an aging population.
So that's definitely going to help in inventory. But then, of course, that creates another issue of old age facilities and things like that.
So now what I've actually been seeing more and more, people are opting not to go into the old folks' homes, especially after what we saw during COVID, right? Again, the last couple of weeks, I've had 2 or 3 clients, older clients, who have basically said, you know what? Our plan was to sell our house and move into an old age community or an old age home. We have zero interest in doing that. We're still young. We feel good. There's nothing. People are healthier. They live longer. They live longer, healthier, longer, whatever. You know what I'm trying.
I get it.
Me English speak good. Okay, but you know what I'm trying to say,
I
right?
get it.
So they're living. They want to stay in their homes. They don't want to move. So what do? They have a house that's paid off. They get a reverse mortgage. Right, so they get that reverse mortgage, they get an influx of cash, which now they can use to travel, they can use it to do whatever they want to do with, and they could still stay in their house.
And to get the in-home nurse.
In-home care, which is something that happened a couple of weeks ago.
Yeah.
Older couple, both of them in their early 80s, and they have a house that's fully paid off. They have one kid, and the kid said, I don't care. Yes, let's get a reverse mortgage on the house. I want my parents to be happy. Right?
Course.
So what do? We get a reverse mortgage for them. They get a nice chunk of money out of that house. Now they have cash reserves that they can use to pay for that in-home care. Also, there's other ones that'll structure it a little bit differently. Instead of doing an in-home, getting lump sums, they're going to draw on the house. So they're going to get a certain
monthly income.
Exactly. So they're going to get a certain amount up front, and then they're going to get a drip coming in, almost like a riff. Beautiful.
Yes.
So they don't want to give that up.
Now, with respect to immigration, that's going to affect as well the real estate market.
Absolutely.
More immigration comes in. Some people come in with money, ready to buy.
Yep.
No inventory. So more demand.
Yeah. And we know that that immigration is going up.
Yeah.
There was a halt again during COVID. Now it's, we're back to the way it was before that. And we now have refugees and all kinds of people from all over the world that are coming to Canada. What do you think is going to happen? And the foreign bans don't apply.
Of course not, because they're going through the immigration process.
Exactly. So
now, with respect to mortgage rules, that can affect as well the real estate market. The more the rules get strict, the harder it is to buy. That can affect the market, no?
I think that it could have a temporary pause on the market, but okay. I don't believe that it's going to have any type of significant effect. Actually, I think it might have the opposite effect, because now people that were thinking about selling their house and buying or downsizing, they can't downsize because maybe they won't qualify for another mortgage. So if that happens, they're going to stay put.
And last but not least, I know we were really up against the clock, but interest rates, of course, also affect buyer behavior, seller behavior. So there's a lot to look out for in the next year, 2 years. So definitely we're going to keep an eye out.
Absolutely. Marav, we're out of real estate. If somebody wants to get a hold of us,
you can reach us at the office at 514-680-4674.
Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kalakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.